Guys, welcome back. Welcome to another weekend update. Last week we discussed how we were looking for a push into this trend line channel, right? And you can see that we pretty much tagged that and have been selling off. However, something I want to point out is I could still see a test of the top of this trend line again before the move lower, right? That's still what I'm looking at, right? Though, as you can see here, this level is holding again as resistance because it is the trendline resistance. So the market could just as well start selling off. For a bigger picture, we're still in this rising wedge, right? So what I've been looking at still hasn't changed, even though it had a strong Friday. What ended up happening is we pretty much just, bounced off of support. We're channeling up and down right now in this channel. So again, ideally you would have to wait for the market to break below 3,800, right, to see the next leg down. Till then, we're likely stuck in the channel and we can't, say with confidence that it's going to sell off. But the primary scenario is still that I'm looking for this area to act as resistance for the next leg down. Alternatively, though, right, I think whether I'm bullish or bearish, I think this 3937 3950 will act as resistance to at least, come down and test 3750, 3700 before the next leg up, right? So I think whether I'm bullish or bearish, I'd still expect some kind of downside this week or next week before, determining the next move. With that being said, we saw that though the market was strong on a Friday, look at the dollar. The dollar closed green, right? And the dollar looks pretty strong right now. So I could see if the dollar goes on to make new highs, then, kind of my thesis of us testing a new low still in probability, right? And same looking at the 10-year, right? The 10-year is holding these levels, right? As long as 4% holds, or I'd say about 3.7%, the 10-year again stands at risk to go make new highs. So again, another chart that I think could, kind of put it into perspective why, we could head lower and why this could, be another bear rally. I'm still, right? I'm just, taking it day by day, right? I'm just looking at levels, but yeah, if I had to look at both the bull and bear version, I'd say that the market is likely headed lower in the next 2 weeks. So yeah, that's just my broader perspective of things. With that being said, let's look at this week's watch list, right? The first stock I have is Netflix, and again, similar channel, right? This is the channel holding as resistance, this is the channel holding as support. Though I could see a retest of the upper channel, eventually I see it coming back to test the bottom of this channel. So that's the reason I have Netflix puts on there. For now, I'm just looking for a 15-point move down, right? But if this channel, right, on the market, if we break below 3,800, then Netflix could be one of the prime candidates to, get hit to move down lower. The next stock I have is NVDA. The reason for that is, again, you can see kind of in this bear flag, I could see a retest of 139, 140, but once this flag breaks down, I'd say below one, I have a move down to 130, but if it breaks 130, this would make a very nice bear flag move down. And it would kind of be the same for most semis, right? Another interesting semi to watch is MU, because again, you can see that this is a channel. We broke out, we retested, and now you're looking to see if it fails. If it does fail on MU, right, it should come back to the bottom of the channel. So gonna have the same thing for most semiconductor stocks. Like LRCX did run up more than expected, but you can see here, it's just pushed up to the previous wave 4, right? Which means that this chart is still very much in play. And I apologize for my voice. I have a really bad cold and fever, so hopefully I'm audible to you guys. But yeah, most semiconductors look like they're topping as well, right? With that being said, let's look at the next one. And again, this chart is very dependent on if it can break and stay over 24.78. I think it has an incomplete ABC pattern, but again, I'm not too confident about this, but bigger picture, if I go to the daily chart of UPST, you can see this is the downtrend line, right? And you can see that it broke out, and so far, UPST has been consolidating sideways, right, out of that channel. So that's why I think that if it starts to break 24.78, it could run up to, 28 and even 31, right? So, and it's before earnings, so it could have some kind of pre-earnings run up. But again, I'm not highly confident. I would like to see it break over 25 to reach those levels and fill this gap, right? And the next one I have is again Shopify. And this is again another channel to channel kind of trade, right? You can see that fake broke down, consolidated, moved back in the channel, and every time it's moved back, it ideally, tends to hit the top of this range. So that's why I have, shop calls over 35. I think it can run up to 38, 39 to the top of the channel before it's done. And the last one I have is OXY. And again, I kind of have the same chart for most oil stocks. I do think that they're kind of topping out, right? Oil does not look great. I still think that oil could, come down to test a new low, right? Finish the C wave here before it, starts a new leg higher. So it's kind of what I have for oil. Kind of see the same chart in XLE, XOP. And again, I would need confirmation for this. I don't want to just say, hey, oil is definitely going to sell off. I would like to start seeing weakness in the sector to, you know, kind of put it into perspective that this possible stop still has a gap to fill higher. So oil could stay range bound for another day or two, right? Into FOMC, and then we'll see what next. So yeah, that's all I have for this week's watch list. Have a great day.